Hello, guys. We'll just wait for a couple of more minutes before we start off. Very good morning to everyone. Hello, all. Very good morning. My name is Sashidhar. I am one of the co-founders at GradRight, and we are doing this webinar to specifically talk about what is really the best loan for us and how do we really crack them and how do we really know what is the best loan. And I just want to make sure that we catch up on the definition of a best loan and set the context for this webinar. So before we jump in, I would just like to have the participants share the location from where they are viewing this webinar in the chat box on the right. So if you could share your location, the city that you're from, in the chat box on the right, that will allow us to know where you're from, and also in a way test the chat channel so that we are all aware that you could post the questions there. So could you please try that now? Sudeep from Hyderabad, Aman from Delhi. Could others post your city too? Abhishek from Bangalore, Lavish from Gurgaon, Anshul from Chennai. That's wonderful. And as we move into this session, you could feel free to ask any questions. And anyone who is new to this channel, we actually post a question to asking them to post their cities so that they know that they can post anything on that channel. So let's make this session super useful for you. So it will be very useful only if we know what your questions are. So don't miss on that front. And so I'll briefly introduce, myself first, and then getting to GradRight. My name is Sashidhar, and I'm basically a graduate of BITS Pilani, 2005, 2009, and worked for a couple of years in Singapore. Came back to India, did a program called Young India Fellowship, and further worked in the setup of new university called Ashoka University. Led the project set up on the outreach front for about 3 years. After that setup, I moved on to do my master's in higher education. Education is my passion, and so I chose that field on a Fulbright scholarship, completed that, and came back to India to set up this company called GradRight, along with another co-founder who is an IIT Delhi ISB alum. And the founding team is basically alums of IITs, IIMs, and various schools in the US. And what we feel is that we could solve for this, costly loan options often students take. What we observed over the last 2 years is that about 80% of the students actually can take better loans. There are better loans out there. They just maybe not knowing them and not realizing that there are better loans out there. So that is what we have been working on, to figure out a system through which it becomes as easy as booking a flight ticket, or it's easy as booking a movie ticket, right? To actually get your education loan. So as we are in the process of doing that, let me explain how these banks really work and what happens in these banks regarding any student profile that gets submitted for a loan application. All right. So to start off on that topic will enable you to see how to view the banks, and further I'll get into some specific questions throughout this session. I'll take some cases and explain some best options that can be possible for those profiles, so that you have examples and know exactly which bank would be the best for each of your profiles. Now, on this webinar, if you have any questions, again, use the channel or the chat channel on the right, and we'll be making sure that we address all of them as we go along. So firstly, to understand how the student loans work, you need to understand that there are approximately 35 to 40 options out there in the entire world that actually cater to Indian students. Indian students who are going abroad, many people think that it's just the Indian banks and the lenders, but there are also institutions outside in the from the countries wherever you're trying to go to. They would also be happy to lend you money. So based on what factors do they actually lend money? Majority of them, of the students, assume that you need a collateral. Firstly, collateral is an option. It's not a mandatory thing. Okay. So you can have collateral. You need not have a collateral, to actually get a loan. And the second point is, with these loans, each profile is treated differently, because there are multiple data points that students or the banks would often actually evaluate. For example, some bank would evaluate your GRE score and the university that you're going to, and will be happy to reduce their interest rate and make you eligible for their loan. In some other banks, they would straight away ask you, it doesn't matter where you're going. Do you have an admit? That's fantastic. Now, let me just see your collateral, and I will give you a loan against that collateral. Often, public sector banks give these collateral-based options. There are no non-collateral options above 7.5 lakhs in the public sector space. And there are good number of non-collateral loans as you move towards private banks, as you move towards NBFCs, which are called non-banking financial corporations, and as you move towards international lenders. So those three categories will have non-collateral loans. But if you want to go to an SBI or a Bank of Baroda or a Punjab National Bank, all these banks would ask for collateral. And at times, a collateral-based option might be the cheapest one, but a non-collateral options in some cases could actually be cheap. It depends on whether the lender is valuing your placements at your university or not. And if they are convinced that you have good placement potential and decent amount of chance that you would actually land a good job, then they are happy to give the loan without any collateral. So setting that context in your minds is very important, so that you could evaluate your own profile with that lens. And with 35 institutions who are ready to give you a loan, it is also important to understand, you would want to actually put in your profile with each of them and understand what they're saying. But do you have the energy to actually go to all 35 banks? It's quite a tedious task to do that. We will get exhausted the moment we actually put in the applications with maybe 4 of them or 5 of them. In general, that's what we do, right? We choose, an SBI, we choose an HDFC Credila, we choose certain banks, and then maybe go out to them, reach out and put in the applications and decide on the loans. Now, with just 3 or 4 options generally considered, often students lose on getting to the cheapest interest. And one way to define the best loan is by getting to the cheapest interest loan. And that cheapest interest, what is the impact of it? For example, you have a 10% loan, with some bank. If you could even reduce it to 8%, that means 2% difference every month. The EMI gets paid. So 2% at an annual basis would mean on a 40 lakh loan, it is 80,000 rupees. So 80,000 rupees that you could save every day, by choosing 10% loan, you are actually not saving it. So it's an unnecessary expenditure that students often get into, but they don't see them because you never knew about 8%. So you'll feel comfortable paying the 10% completely without any questions. So when we talk to alumni, it's a surprise that majority of them are on suboptimal loans. So we want to create this insight that there could be cheaper options. You just need to search the right way. Now, let me get back to the definition of the best loan. Sometimes the best loan is based on this interest rate. The other factors based on which you can evaluate your best loan is, say, for example, is the loan really family friendly? Is it considering the collateral that you have and valuing it the way you want it to be valued? There are some banks wherein you show a 90 lakh collateral on a 1 crore collateral where they would put the value at 56 lakhs because their evaluators would have a certain conditions. In some cases, you have a gram panchayat or or a municipal corporation land or an apartment or mostly an open plot, for example. Banks may not consider those cases. Agricultural land is generally not considered across the board, but there are some banks which are okay with gram panchayat kind of a property. So the best loan would also need to consider and value whatever you can give, and based on that they need to figure out whether the cheapest interest rate is being met or not. The third factor I would say is in a way whether they have the past reviews really aligned from the point of view of visa friendliness, from the point of view of customer friendliness. Are they actually disbursing the loans in time, and where are these reviews really getting collected in a rational way to judge whether it is actually the best bank for you or not, in terms of not facing any problems as you move along. So these are some of the things that you may want to evaluate. Now, I will jump on to requesting you to at least one of you to start off with this, and all of you can do it. Why don't you go ahead and post the university that you're considering? Uh, if you have an admit, if you don't have an admit, that's fine. But post the university name, the program name, and the amount that you're requesting for, and is there a collateral that you can submit for. So just the university name, program name, the specific amount that you are looking for a loan, and then the final one is about whether you have any collateral with them or not. So if you post these things, and we'll type it out here to make sure that you are clear with the question. So if you post these parameters, these 4 parameters, I could quickly comment on whether there is a huge pool of lenders who will be willing to give you the loans, or there are only few, and who exactly they are for your particular profile who could consider a loan. And based on that, we will deep dive into which one could be better and why it could be better. And these are all comments from our own experience, our own studies, our own research. So you could always reach out to us, and as you give more details on this profile, obviously the nuances will improve. Based on whatever I say. For example, I say a range in interest rate, the accuracy of that interest rate would be finer and accurate and more precise if you post something which is if you don't have to post it here, but if you submit a PAN card number and credit history and the exact property documents to the banks. So have that in mind. These are indicative set of options that I'm sharing with you. So in case of Aman Gupta, you're going to Trinity College Dublin, and you're going for MSc International Management, and you're looking for 20 lakhs, and collateral is available. So whenever there is collateral available, suddenly all public sector banks become clearly a set of options to really choose from, right? And based on the collateral, if it is an open plot, for example, SBI prefers open plots in a way. That is something that we understand from our conversations. And if it is in some banks, they don't prefer open plots. They actually would want to only prefer a certain set of apartments or homes that are already constructed. And at Punjab National Bank, when the collateral value is actually, say, 50 lakhs or 60 lakhs, and you have a requirement of 20 lakhs, then they will not just give you a loan, but they will also reduce the interest rate. And among these players, Canara Bank actually is a little more favorable in terms of actually giving the loans because what we understand from them is Canara Bank actually set up with a principle to support education loans way back in the past. So it runs from the founders, and so there is an interest rate between 9.1 and 9.6%, which often tightly competes with any of the other public sector banks. So that could be one other option that you could evaluate. And with your 20 lakh requirement with collateral, if the collateral actually is the value of about 25 lakhs, then most of the public sector banks would be happy to give you the loan. If the collateral value is 15 lakhs or just 20 lakhs, then you should look at NBFCs, which are like Avance or Auxilo, or even at times, ICICI Bank or Axis Bank, who actually give you part non-collateral loan and then take the collateral, and meet the rest of the loan with the collateral. So they can give you a 10 lakh, 15 lakh non-collateral, and then take the collateral and support the gap of 5 lakhs or 10 other lakhs that you need. So it will be a mix of collateral plus non-collateral loan that you can avail from such banks and such private banks and NBFCs. And if Trinity College Dublin, because it's a fairly good one, you could also evaluate international lenders. I'm not sure if Prodigy Finance actually does this, and there are, because it is in Ireland, there are lesser number of lenders. If it is in the US, then there are more lenders. Even in Canada, there are a couple of lenders who could give you these loans. But Dublin, non-collateral, there are few private banks and and NBFCs, and I think even Incred or Avance, and even if you consider Auxilo, they are open to giving some certain amount of non-collateral loans. So mostly 20 lakhs is a comfortable number for most of the lenders. They may stop at 13 lakhs, 15 lakhs based on your family income. I did not ask you to post it here just in case you want it to be a personal conversation. We can have that, but based on the family income, that possibility increases. I hope that insight is useful. There are some non-collateral loans that you can get from Ireland. Make sure that you evaluate them, and you can give them collateral to increase the loan requirement over the non-collateral amount. But the interest rates will be a little taller than the public sector banks. If you have collateral, you will mostly need to go to a public sector bank in this case. In case of Abhishek Chatterjee, firstly, Aman, I hope that was useful. Let me know if there are any follow-up questions. And Abhishek Chatterjee, you're going for Masters of Software Engineering at CMU. If you could, put in some more details around, say, what is the loan amount that you require, and what is the collateral, whether there is collateral available or not, and I could comment on that front. And in general, at CMU, it's a well-known program, and what you would, I'm assuming it's Carnegie Mellon University. When you said CMU, with all the abbreviations, I think we just need to be clear before commenting much. So in terms of, because it's a US university, and also, it's a well-known university, you could evaluate some non-collateral options. There are interesting ones that are present. And, whatever I'm commenting on, there are some of the options. For example, you could look at Prodigy Finance. You could look at, any of the private banks, or HDFC Credila, Axis, ICICI, etc., wherein you would find some non-collateral options, which in some cases, it may be a 20 lakh non-collateral option. Some cases, it's a 40 lakh non-collateral option. And as you get into Indian private banks and non-collateral options, your interest rate will not go less than 11% or 10.75 at best, not below that. But if you look at international lenders and the non-collateral options, they don't work with within the regulatory mechanism of India, and their capital sources are actually from abroad. So they actually can give you, because it's a good university, you must be having a good profile. They can comfortably reduce the interest rate, and they play with the possibility of your placements. So you can get to say around, even I'll not be surprised if you get a 7.5 or a 7% interest rate And if you have a cosigner in the US, the US local banks get opened up. So you could evaluate if you can get a cosigner who can sign for your loan. In that case, you can reach even a 6%. Please let me know as if there is any other question. Loan amount is the tuition, $95,000 with no collateral. So $95,000, which basically comes to around 65 lakhs. In India, you would not find a non-collateral option for the entire amount. You have to rely on an international lender, and in which case there is a possibility of covering up, and your best bet could be Prodigy Finance. And also, Empower is another option, but they have a limit of about $50,000, or so. So you need to check whether they can split it into different years, and whether the amount that they're giving is comfortable for you or not. But their interest rate is slightly on the higher end. Maybe it's between 10.5 to 12%. That's the range that they play with. If you have any follow-up questions, again, feel free to comment. And the next is Manish Chandra, UIUC BS Mechanical. Manish Chandra has 90 lakh collateral available. So UIUC BS Mechanical, again, I would say, if you can allow me to ask, could you please expand the university list? I understand that UIUC could mean different things, but just for the clarity purposes, if you could, write out the university name, it would, help people. I'm assuming it's the University of Illinois Urbana-Champaign. UIUC BS Mechanical, it's a decent university for sure, and so I think it would be similar like in case of Abhishek, wherein you will have a decent number of options for sure, because it's a US university. And also you're going for a mechanical program, which is a STEM program. So you will have international lenders surely opening up options. Prodigy, Empower, these are the two. And there is also, an option of evaluating, say, in Indian lenders, if you have collateral of 90 lakhs, and I'm assuming the cost at UIUC could be around 50-60 lakhs. If I'm wrong, please let me know what is the cost that you're looking at that particular. So I'm assuming 90 lakhs is the cost, and you have a collateral available. So 90 lakhs, if it is the cost, and if you have a collateral available, then the question is, how much is the collateral worth, and who is valuing it? So if the collateral is exactly 90 lakhs, you will have a hard time convincing a public sector bank. But if it is exactly 90 lakhs or even 70 lakhs or 80 lakhs, then you will have private options coming up. They will see that, oh, you have a collateral of 70 lakhs, that's fine, but you have a great profile. Let me give you 20 more lakhs to make sure that you cover the entire cost. And in NBFCs, you often find 100% coverage of all your options, like Auxilo or Avance. But if you reach out to private banks and public sector banks, they would ask for a margin amount. They would ask you to pay 10% or 15% margin amount, and only then they will actually give you the rest of the 85%. So keep a note of that and see if you have savings that meet the margin amount. And you don't have to show this margin amount upfront. What you need to do is, at the time of disbursement, you need to show this margin amount. If you need 30 lakhs, they would say, I will give you 27 lakhs. Where is your 10%? Show me 3 lakhs, I'll show you 27 lakhs. So it's a per each disbursement that you need to show these margin amounts to these banks. So that is, that is in case of Manish Chandra. If you are going for a collateral loan, I would strongly recommend not jumping onto just SBI. At SBI, of course, there is a 9.7 if the for guys, and for girls it is about 9.2%. In general, based on gender, there is a 0.5% concession for girls across all public sector banks, mostly all public sector banks. Bank of Baroda also introduced that recently. So if your university is in the list of any of these prime lenders like Indian Bank or Bank of Baroda, you will suddenly find your interest rate actually moving towards 9%, 9.2% too. So you have a potential of actually getting to a the cheapest interest rate at Indian Bank or Canara Bank, or Indian Bank or Bank of Baroda, and the next option could be Canara Bank if you're going with a collateral loan. And if you are looking for a non-collateral, as I explained, go to the private banks, international private banks if you have margin amount. If you don't have the margin amount of 10 lakhs or so, or you think you will not be able to show it as you ask for disbursement over time, then go for NBFCs within India like Auxilo or Avance, or go to an international lender, and make sure that all the offers are compared and you reach a clean table wherein you actually evaluate what are the interest rate, what are the prepayment terms, are they actually allowing you to pay early because you're going to a good university, are you able to pay early or not, are they supporting that mechanism or not is important. So, next comes Aman Gupta. Aman, we talked about your case. I wanted to ask about loan scholarships like NSF, PG scholarship that provide zero interest loans and other options present. So in terms of scholarships, it's also a point that we researched on, wherein scholarships and soft loans, I think here you're talking about a soft loan at 0% interest rate. You should consider evaluating whether a JN Tata kind of a scholarship or Tata Trust has actually soft loans and scholarships. Similarly, there are other soft loans and scholarships that are possible. We're trying to make sure that an updated list of pending scholarships with deadlines that are upcoming actually is clearly visible. But you can reach out to us and make sure that you have that list sorted. But in terms of specifically NSF PG, I'm having a hard time recollecting what exactly is NSF PG. Could you help me with an expanded form if you don't mind? And there are a good number of soft loans provided by foundations. There are about 4 or 5 of them in general in India for international students going abroad, for Indian students going abroad. So it would be a good bet. But the key point is they always ask for what is so special about you. Are you academically bright? Are you having a financial need? Is even your loan not covering the entire expense? Is everyone saying no to your loan? So all of these factors would play in to, that would enhance your profile for each of them. Yeah, Narottam Seksaria. So, sorry, I never used that NSF as a short form. So basically, this is one of the things that we worked with a few students to apply. So you could, surely consider that as an option if the deadline is still open. And you should, more often than not, it takes mostly about 4 hours or 6 hours max to actually put together your best application forward. It's worth the time to actually make sure you put in those applications. So make sure that you read the conditions. Each scholarship and soft loan will have its own conditions. Some of them will ask you to come back to India. Only then you can take the amount. Read before you put in all the effort and make sure that you agree to all of them. For example, I was on a Fulbright scholarship, which asked me to come back to India. And I signed up for it because I had no reason to actually be abroad when I wanted to set up a company here. So I was okay with that, and they gave me 70 lakhs for that. So it's always a trade-off based on your profile, what you want to do. It's, based on that, you could evaluate. So let's move on in this list. Srikar, UK, Coventry University, loan of 25 lakhs collateral in the form of land for construction management course. This is an interesting one because construction management, could be considered under STEM by some, and for some it is non-STEM. So it depends on bank to bank. And Coventry University, which is in the UK, for UK in general, non-collateral loans are very less, but there is there are few players like, for example, Avance does non-collateral UK loans. So you could try, but they would not cover all 25 lakhs, but there are non-collateral options. So with the collateral, they could easily match up the requirement. And so with non-collateral, the interest rate is high, but you could at least reach 20 lakhs, and the remaining 5 lakhs, you can show the collateral and, get the entire loan. But the interest rate would be on the higher side. And if collateral has a problem, has deviations, is on the border case, or you don't want to use the collateral, then that becomes the option. But if you are okay with using a collateral for UK, then you have nearly every single public sector bank available. And among them, as I said, try looking at, say, Indian Bank, or there are few issues the way the engine runs with these public sector banks. So you have to be patient with them. You have to be okay with the pain at times. They are not as friendly as NBFCs or private sector banks. So it's a cost, right? If you are okay with having a loan in just 2 days, but you are paying a 13-14% interest or 15% interest every year, if you feel that is worth it, then go ahead with that. But if you think that no, I want to get a 9% interest so that I save on 6% on 20 lakhs, which is about 1,20,000 every year, and I will take about 5 years, so it's a total saving of 6 lakhs. So I would rather be patient with a public sector bank if that is the thought process, then go ahead, do that. And in case of public sector banks, there are some public sector banks which would, again, have a short list of universities. If your university falls in that list, they will suddenly reduce the interest rate by even up to 2%. So Indian Bank can come to at about 9%. Canara Bank can come to at about 9.7. Bank of Baroda between 9.4 to 9.8. So based on the specifics of your profile, we could figure out which one actually is the best among many other banks. I hope that was useful. So Manish has a call from Purdue. All the very best with that. And with better and better universities, you could actually get more non-collateral options, and you could even evaluate. There's a good potential that you could, as you improve your university, you have a reduced interest rate that you can attain with non-collateral options. So just make sure that you check for each university, admit that you have with as many players as possible, and get to what you want. And just to let you know, because we are in the middle of these discussions, what we established at GradRight is a system which will actually, create a profile and make sure that it reaches out to all 35 institutions and gets evaluated against all 35 institutions. And we basically put together the best offers and let you know for free. So you just need to get to our website. There are many things that are nuances in this application. So your GRE score, TOEFL score, your college that you graduated from, the university that you're going to, the family income that you have, the collateral that you have, the type of collateral that you have. So the cosigner, credit history, there are a ton of things that will come into the play of things. So if you submit that form, we'll be able to make sure that we call out the best offer after comparing every single option and let you know. So in case you don't find time on this webinar, you could do that. Even if I'm answering these questions, I'm not being specific about which is the best because it is profile specific. And the best option, so Sudeep is asking a question around Prodigy Finance for a non-collateral loan from Indian lenders. So he was comparing Prodigy Finance with a non-collateral Indian loan for a loan of up to $30,000, which is about 23 lakhs. And considering the interest rates, processing fees, taxes, forex charge, total repayments, etc. So I would clearly call it out that Prodigy Finance is not going to give you the lowest interest rate for sure. Like it starts from 7%, it could go till 11%, 12%, or 11.5% or so. So it depends on what are you getting in India and what are you getting with Prodigy Finance. And there is a 5% or 4% admin fee that they have. So which is basically a fee that gets added to your loan amount. So if you're asking for 20 lakhs, then they put in a 5% on that, which is 1 lakh, and they give you a loan of 21 lakhs, and you have to basically pay the amount 4 or 5% upfront and move on, or you basically pay for the pay towards that as a loan. So you have an option there. But in general, the non-collateral lenders in India would not go below 10.75 as the least. If you find Prodigy Finance to be giving you an interest rate at less than this amount, you should go ahead. You could go ahead with Prodigy, but don't. I would not recommend going ahead if it is at 10.5 and an Indian lender is at 10.75. It's a very less of a difference. Particularly you have to consider a few of the other things. How is the US dollar and Indian rupee going to change in the next few years, maybe 3 years or 4 years? That matters to you most. So if you evaluate that, you will be able to understand that the movement of this US dollar and Indian rupee, if there is too much of movement that is possible with the economy, maybe the depreciation need not be that much. And it could be maybe 72 rupees that we have or 71 rupees that we have today. It will move to maybe 74 or 75 max. Now, that means your Prodigy loan, could get costlier, especially if you come back to India and pay, or your parents are paying for it. So it is important to understand that nuance. And if you are confident of actually getting placed there, and you see 90% probability of actually landing a job in the US, you need not pay during the program for Prodigy, but you will be able to pay right after your graduation because you have a job and you'll be earning in dollars and paying it in dollars. But every year, there is no difference if you're paying within dollars. But if you're sending it to India and rupee is actually depreciated a bit, for every dollar you're actually, once you transfer it to India, it becomes 75 rupees instead of 72 rupees. You can actually send lesser number of dollars to pay off your loan. So that becomes attractive for you. And so an Indian lender could become attractive if it is a difference of about 0.5, 0.75%, and if it is in that range. But beyond that, it is a clear winner. That Prodigy Finance could be a better one. Also, there is another aspect of visa friendliness. There is some talk that visa officers could evaluate whether you have a not so good university, but you have a non-collateral loan from an international lender. They may see no connection for you to return to India. So this is not facts based. There is no clear data out there. This is a comment that was shared by some of the people. There is no proof that this is true. So I personally don't believe in that, but it's a risk that every student should take. So I'm just letting you know that there is a possibility of this. And more importantly, you could change your lender at any time. You should also be aware of that. Read through the prepayment conditions. Read through what happens if you don't take the loan after after say a couple of months in August. If you change your loan, and that becomes important so that you could play with a loan which is visa friendly and actually move to one which is the cheapest. Now I'm talking about it might be unethical to move the lender. If you don't feel comfortable, that is fine. But as such, there will be no effect on immigration or you being in the US and studying, as long as you have the financial proofs. So you need not stick with your lender throughout if just they're not giving you the best service and offers. And coming to the next question, consider the net interest in case of Prodigy. Yeah. So in case of Prodigy, they put in the interest rate and then the APR. APR is basically a standard through which you actually realize what is the amount that you pay, and all the admin fees gets added to it, and then the APR comes through. So I'm considering the APR and really talking about it. If you don't pay admin fees upfront, then it goes on to the APR calculations, right? So I recommend evaluating APR versus Indian lender and not just look at the interest rate. And of course, even in the Indian lenders, you will have a processing fee, but not as high as say 5% of the loan amount. It could be about 1% to 1.5%. But you need to pay that upfront. In some cases, they will adjust it to the loan. And so is it difficult to get loans for undergraduate course? Manish Chandra, thanks for asking that. There are a good number of students who are reaching out to us about undergraduate loans. And what we often see is that Undergraduate loans is a 4-year program, and master's degrees are 1 or 2-year programs. So if you think like an investor who is, say, buying a land or buying a stock, you will feel comfortable about something which will get you the returns, and in the cash flow starts right after 1 year or 2 years, compared to something which starts after 4 years. And so in general, this is the mindset that many of the lenders also have. They do not prefer undergraduate course funding, but when you have and so non-collateral loans are very, very less and nearly not present in the sector. But what is definitely possible is a collateral based loan. If you have a sizable collateral that would cover the cost of going abroad for an undergraduate program, which could be costing anywhere between 70 lakhs to 2 crores or 2.5 crores. If there is a collateral which matches up to 125% of this amount, then you could surely go to any of the public sector banks and ask for a loan. And that's talking about eligibility. And when it comes to the interest rate options, the interest rate again would be the least, in some banks where the university is actually in the prime list. So in those universities, they will reach to about 9%. In some cases, if you are having some relationships with the bank, have been banking, they may show a flexibility of 0.1% here and there. But more often than not, it should not be crossing 10% at the higher end. It should not be less than 8.8 or 8.9 in general. So that's the take on the undergraduate course. That's picking up, and there are lenders who want to create something around the undergraduate program for sure. Is there any chance we could know the short list of universities which banks have? Srikar, that's the magical question, and that's what exactly we are doing. We in fact, aggregating all this data, and you just need to look at the university that you're going to, and you should know what are all the options present in the market, irrespective of whether GradRight is partnering with them or not, right? So we are in the hunt of getting all this information out to the students, and I think you just nailed it by asking that question. Every bank has its own evaluation process, its own criteria, its own ways of saying yes and a no, its own ways of actually delivering the customer service. So all of these things, we wanted to bring that up and upfront to the students, and have the student clearly evaluate them on a side-by-side basis and take the right call. So we are in the process, and I have to tell you that we could successfully aggregate all that data for each and every lender based on their university shortlist, and that drives our engine. And that is what the GradRight fund service or the platform really does. We basically collect everyone's preference. Either it is the GRE score limits that they have, either it is the interest rate changes that they have, and created the system. And over that, if there is a manual check that is required, there is a service team which would take your profile, reaches out to all the banks and says that you do not put anything online, but why don't you check this case and let us know what is the best offer this student can get from you. So that is what you could get, and you could just fill up a form which is about 20 questions long. Don't mind us asking those many questions. It is useful to get to your best offer. So it takes 10 minutes. Fill that form, and we actually can do all of that for free to show you the best option. I hope you guys will take advantage of that. And international lenders for undergraduate courses, well, if you have a co-signer in the country, there is a good potential to actually get these international lenders give you the money for the undergraduate courses, Manish. But in general, there are no non-collateral loans that come through for the undergraduate programs. There are some universities in their university websites, they put out some loan options which are available for their students. At times, they don't require any collateral, and international lenders never ask you for collateral in general. About 99% of them won't. And it's important to make sure that you evaluate on the university website for the funding options. We're also evaluating how best to engage universities and create a clear way of saying these are the possible options for them, for Indian students. So any Indian students who reaches out to them, they could use the data from the Indian industry and say that you are an Indian student who got admitted, here are your best options. So we are working with the universities on that front too. So, but right now, I can't name any international lender who gives a non-collateral loan for an undergraduate program, and there are no collateral loans. So, effectively, without a co-signer, it'll be hard to get a loan from the international banks. If we get our loan approved, disbursed, and decide on not going or unable to go due to reasons like COVID, how will that play out? So mostly you will lose on the processing fee. And I think for a 45, 50, 60, 70 lakh loan, a processing fee of 1% could mean 50 to 70,000. I think it's a reasonable bet, and what you could essentially lose on just that, because you would actually take disbursement, once you are required to pay. So I think it is important to take the disbursement, at the far end of the entire cycle when you are sure that you're going abroad. But once you take the disbursement, once you put in the application for the disbursement and the funds get transferred, then the loan EMI starts. And the loan EMIs, or not all of those banks would actually wait for your studies to end and collect. They start the very next month. So your parents would be paying that EMI from the very next month, or they pay a simple interest in some cases. And there are some, banks, at least the private ones, or the international lenders, or the public sector banks. There are some banks which actually don't charge anything until you actually graduate. So it's called moratorium period. You should ask about the moratorium period, or a cool down period that it is referred to as, and make sure that there are no immediate payments that you will need to start with. If at all you have a deadline of paying these fees in May or June, then you're actually flying in August. If you pay off the amounts in June or July or May, you would start paying the interest rate in July and August. So the processing fee of 1% approximately, and the monthly payments that you need to make, these are the two things that you will lose. And then once the disbursement is made, if you're not going, you will have to pay back the disbursed amount. You can issue a refund from the university, and then you could try paying that back. But there will be another 1% of prepayment penalty. So just take care of those things, and you would need to mentally prepare yourself to keep aside 2% or so as all the fees that you would lose if at all you you ask them for the disbursement. Otherwise, it would be about 1% that you will lose, if you step back at the far end of this decision-making cycle. Is that something that is useful? I want to just understand if I am completely off the track, or am I addressing the questions in a way that they are helpful for you? And if there are any other questions, feel free to write them down. And if there are more questions to answer, then I'll keep this going and answer those questions. So in general, what we see is, as the questions are coming through, I'll just wait for you to think through more and let me know if you have any other questions. But more often than not, people just think the fundamental reason why students actually miss out on the savings possible, or are basically as follows. Number one, students or parents think that there is time. I don't have to hurry through. I will apply in March or April. It's important to apply as early as possible, not because you will benefit any other institution, but you will benefit your own self. Because there is a small negotiation possibility in each of the private sector banks, in even public sector banks. There are, based on the data that you show, there is some wiggle room, and that wiggle room gets closed up as there are more number of students asking them to process the loan. So in March and April and May, these are the months when even the far end of March or April, May, June, these are the months that a huge number of students who go abroad like you. So they would all put in the applications. And when it is a busy season, the wiggle room and the reason for banks to really get you and give you the loan becomes a weak reason for them. There's so much demand that they don't care about maybe giving you the best. So keep that in mind. And number two, so start early as possible. If you have even one admit, it need not be a final admit, reach out and find out what is the best option for you. The second one is thinking that I did my research, and so I already have my best option, and actually jump into it. I would urge students, and that's the reason we put it as a free one. I would urge students to share the profile and have us check on what is the best offer that is present. And you can view that offer without any fees. But it is important to understand that just because of the assumption that you have the best option, and it's psychologically it's hard for someone who did the research among 4 or 5 banks to assume that there is something better. But there are newer players who are not really aggressive in marketing, but they have good products, and you should take advantage of those products. You should be feeling comfortable taking that minor risk of a new player, but you will not, even if there are NBFCs and there are international lenders, it is worth evaluating and making sure that you have a conversation with as many as possible. So you will see the best offer from us, and or if you already have the best offer, we'll confirm that it is the best offer. So don't miss out on that possibility is what I advise. So as early as possible, and make sure that you apply to the banks if you finalized your application with which bank you want to apply to. But before finalizing, just give a hygiene check on the offer with us, and allow us to just use 48 hours to actually get back to you whether that is actually the best offer in the market or not. And that leads to a potential saving in lakhs over the loan term. And one significant case that I still remember is that one student who was taking a loan at 15% last year, we could move that to a 9% just because he was open to asking. So that's a 6% saving on a 50 lakh. That means 3 lakhs per year over the loan term of 10 years. It becomes 30 lakhs of savings. So take the call wisely and make sure that you don't miss out on those options. And any other question that I can help you with, feel free to comment here. And if not, I will have to close the webinar in about 7 minutes. But I'm here to answer any question. And in case of collateral loans, as I said, where exactly is the location of the collateral, the type of collateral? If you have a commercial property that your family owns, that becomes more attractive. And if you have the legality is completely clear, then most of the public sector banks would be happy to take that if it is mostly in not in gram panchayats, and if it is in the metropolitan areas, then you have greater options or better options. And in case there are deviations on the collateral, there are still banks out there and NBFCs which are okay with deviations, because essentially it is an education loan. They are not giving you a property loan. So take care of that and be open about asking as many people as possible. Are the lending rates different for undergraduate and graduate courses? I think there is a slight deviation or slight movement on the undergraduate and graduate courses. The lending rates are slightly different. In case of undergraduate courses, when you go to private banks, the variation is higher. Like in the graduate and the undergraduate, it's undergraduate will be somewhere a little higher than graduate is what I observe. But in case of public sector banks, they don't differentiate on the kind of program that you're going for. The moratorium period is longer, and so the interest that you pay, if there is a moratorium period, whatever interest that you accumulate it gets accumulated and then compounded. So basically, it will be treated as a loan for 4 years, and then you start paying EMI or interest rate on that accumulated loan amount. Say you take a loan of 50 lakhs. In 4 years, with all the interest, it may become, say, 70 lakhs. So after 4 years, you start paying interest on 70 lakhs and not just on 50 lakhs. So it becomes costly just because of the structure and the time that you take the money from them. In case of public sector banks, there is absolutely no clear differentiator on graduate programs will have a lesser interest, undergraduate programs will have a higher interest. I don't see that happening in the public sector banks. And more often than not, for undergraduate programs, public sector banks are readily available and with all the collateral, because without collateral, even private lenders aren't giving those loans. So when it becomes a collateral backed one, the public sector one would be your best options. So anything else that you have on your mind in terms of, say, evaluating these loans? If you have multiple admits, if you have more than one admit, I always urge students to ask for non-collateral loans and evaluate the interest rate, because whoever is giving you a non-collateral loan, that those are banks which are actually really figuring out whether they're good placements or not, whether the student will earn more or not. So they back their lending algorithms or evaluations based on certain past data. So as much as you ask alumni about which university is better for placements, etc., from a placement point of view, from earning point of view, you can utilize banks research by just asking them at what interest rate they will lend if it is this particular university and particular program, and compare it with the second university that you have as an admit from, and ask them for the same for a loan on that, and evaluate if there is a difference in interest rate. The lower the interest rate is, confident they are about the placements. So you could you could utilize their data in that manner. So non-collateral loans, whether they're giving it or not is the first thing, and whether they are actually reducing the interest rate for a particular program is the other thing. So I've been, I would love this to be a webinar where we could all interact, but I think I'm happy to blabber through, but I hope it's not a painful lecture session, and it was, okay to go through all of that. It's fun. It's fun to just evaluate these lenders, and understand what they're going through. As a student, it becomes a pain, but it's so much interesting when we sit here, and of course, we do a lot of groundwork to put all this data together. Once we have the system active, we started looking at how much value we could provide to each student. It's just exciting for us to playing the role of figuring out what we can save. Every time we save a lakh or 2 lakh on just even a 0.5% interest rate change, that's real money that's getting saved. So it's exciting to be doing this and talking through all of these lessons that we learned. I hope you could reach out to us, and you could fill up that form that is present in the website. Go to GradWrite and gradwrite.com, and you can visit our plans page and look through for the plan that appeals to you. It's the trust or the treasure plan which is listed. That's the link that you could use, and fill up the form so that we could schedule a call and exactly talk about your profile. All right, it's time for us to call it a day for now. And thank you so much for spending your Saturday morning with us. All the very best as you choose your loan options and the university options, and as you march towards becoming another alum who can guide other students in the future. I will end the session here. Thank you. Bye-bye.